Well, this morning, actually, most global markets are in a sea of green. The SGX Nifty is indicating a 40-point bump up. The US markets had its best 10-day start to a year since 2003, almost a 5% gain in the last 10 days. So it's been phenomenal there. For our own markets as well, lots of stocks to talk about. So let's get our research team on board to tell you the list of top 10 stocks for the day. Anuj, what are you looking at today?
So two non-index stocks. First is Tata Global. Huge jump in delivery volumes, 4.8 times, and it's at a new high. This is one stock which has made a new lifetime high every month, new high every month since May of last year. In the May of last year, it broke out of a 10-year pattern, and after that, it's made a new high every month. This is of course not a day call, but just a point that some of the stocks which come out of multi-year patterns, they just keep making new highs, and that's what's happening with Tata Global. The other is Firstsource. Interesting stock, again 5 times jump in delivery volumes, huge bounce from 50 and 100-day moving average. In the past, it's made heavy meal of 50 rupee mark. It goes to 49 and then slips. Will be interesting to see if this time is different, but that anecdotal evidence has to be taken on board that every time it goes towards 50, it sees selling pressure, but just keep an eye on this stock.
Okay, well, quite clearly the stock of the morning, story of the morning is going to be the Capital First IDFC Bank merger. Everyone knows the numbers, 10 is to 39. So let's straight away go to Nisha to check out the details of the deal first. Nisha.
Mega merger we first reported about, and now it's a done deal. IDFC Bank to merge Capital First with itself, and the swap ratio is going to be for every Capital First share held, 13.9 shares of IDFC Bank will be issued. Now this is very critical. That's something that the market will have to react to. Whether or not it's too expensive and too dilutive for IDFC Bank shareholders is to be seen. Another very important point and a critical important bit of this particular merger is the management change. V. Vaidyanathan, who heads Capital First, who has grown that NBFC from scratch, from ICICI Bank lineage, is now going to be the MD and CEO of the merged entity IDFC Bank as well as Capital First. That's something that the market should take very, very positively. Dr. Lal would be elevated to the position of non-executive chairman of the bank. Now remember that the synergistic benefits of retail footprint coming in to IDFC Bank and the corporate book, and also giving that banking experience to Capital First as an NBFC, are the most important rationales because of this transaction has really happened. But management change is something that both IDFC Bank and IDFC Limited shareholders would be reacting to for sure.
Okay, so both those stocks will be in focus. Of course, they've run up in advance as well, but it seems to be a win-win situation, as most brokerages have indicated as well. IDFC Bank will scale up its retail franchise, and Capital First will finally transition to a bank. But Lata, more on that?
It's 90% win Capital First and 10% win perhaps IDFC Bank. No two ways about that, because IDFC Bank has the banking license.
Exactly.
Anybody would give you a hand and an arm and a leg for it, and it's going at a discount.
Yes.
That's because they've not been able to build retail assets. So clearly it's more of a win for IDFC, for Capital First. And look at the ratio as well.
Exactly.
Today, given the ratio, a 10% jump in Capital First is more likely, or it could be a 2% fall in IDFC and 8%. But that 10% will have to be accounted for by the market. That's one, going in favor of Capital First. Secondly, the problem with this merger is, retail assets can still be made. Retail liabilities are very difficult. You can go and make small loans like the way Capital First has made. I'm not saying it's very easy. It's a big task that Capital First has already achieved, for which it is getting the premium. But it is much more difficult to go and get retail deposits. And anybody will tell you that. Yes Bank will tell you that. They had to pay 6-7% interest. Kotak will tell you that. Yes Bank and Kotak, after 14 years, they got their license in 2003. Yes, today Yes has 1/3 of its assets coming in from current and savings account, but for the longest time they paid 7% and 6%. Kotak could tide over it because they bought Vaisya Bank. So it's not going to be easy for this combo to get retail liabilities. It's going to be very, very tough for them. So let's wait and see. My sense is there has to be another merger with some other small bank. And okay, getting a great banker, but then Kotak is a great banker, Rana Kapoor is a good banker. Everybody struggled for
towards the end, both stocks fall. That could also be, a possibility.
Yeah, because for the combined entity, there are problems. CRR, SLR.
Exactly.
You have to raise another 2-3,000 crore.
Exactly. So, Sonia, I've been making this point for the last 5 or 6 days on Facebook Live as well, that, Capital First, obviously the only reason that they would look at something like an IDFC Bank is because of that license, right? I mean, that license, I think 90% of IDFC Bank stock price is the license. They got the license with Bandhan Bank. Look at what Bandhan Bank has managed to do and what IDFC Bank has done. And in these businesses, you back the guy running it. And the market, for now wants to believe in Vaidyanathan. And its last few years' performance has been at a, of course, much lower level comparable to something like a Bajaj Finance, in terms of ROE, in terms of, managing to grow. So I think that's going to be interesting. But Capital First surely should be the one that should rally, at least for starters. We will see what happens though towards the end in both these stocks. But you know what? We haven't spoken about Infosys, which is quite interesting. Yes. Let's talk about it now. The numbers came, of course, post-market hours. Here's Anisha.
Well, yes, Anuj, the numbers look to me like had no fireworks, but the brokerages are much more enthused. That's because the management commentary was strong. Now, in terms of the numbers, the dollar revenue growth came in at 1%, bang in line with our expectations. Constant currency a tad bit muted at 0.8%, but the margins were maintained. In fact, not only they were maintained in a weak quarter, they also expanded it by 10 basis points and also maintained the guidance on all parameters. In terms of the segments, the North America business continues to be sluggish with just 0.7% growth, and BFS actually just grew by 0.1% sequentially, so just flat year quarter on quarter. But in terms of the brokerages, well, they like the fact that the management commentary regarding BFS was strong for 2018, as the management said that 2018 is going to be better than 2017. CLSA has upgraded the stock to 1300, but on the flip side, we have the likes of Nomura who call it a status quo quarter. They say that despite unresolved issues and no material change in outlook, the stock has run up, and that's why they keep a cautious stance on that. Back to you.
Okay, Anisha, thanks a lot for that. Well, both Infosys and TCS did speak about an improvement as far as BFS spends are concerned. So at least it's good to hear that there's positive commentary there. Abhishek joins in as well. He's going to tell us the latest on HDFC. Abhishek, over to you.
Well, Sonia, there has been fundraising going on with HDFC Limited. So they announced last weekend that they have, raised about 11,100 crores by issue of equity shares at rupees 1,726. They also have a board approval to raise further 1,900 crores from the market via QIP. So in total, they are looking to raise about 13,000 crores from the market in this fiscal. Participants, now HDFC Limited will give out 6.4 crore shares to various participants, the likes of Waverly, Omas Admin, Silverview, Ajim Premji Trust, etc. What this does on equity and the book value, the equity dilution is close to 4%, while the book value can increase by 19%. The objective of fundraising of 13,000 crore is to participate in HDFC Bank's QIP. They need about 8,500 crores. They are also exploring options, inorganic options in the general insurance sector and also in the acquisition and resolution of stressed real estate. So let's listen into the management of HDFC Limited for further views.
Sometime in December, our board had met and we had announced at that time that we are looking to raise 13,000 crores. A bulk of that 13,000 crores was to be raised which was being raised was planned to be invested in HDFC Bank. 8,500 crores was to be invested in HDFC Bank. Then we had also said at that time that we need some capital for our foray into health insurance, because we believe that the health insurance market in India is huge and affords massive opportunities, and we could look at both organic or inorganic growth in that.
Okay, that's important. HDFC Bank actually now is flush with cash. They've got, they will also get money because of warrant conversion. They will get money because of the sale of stake in the insurance wing. So one has to really look out. It's quite possible that there is a health insurance buyout or acquisition that they will look at, or some stressed assets which they have spoken about in the real estate space, affordable housing. Interesting, they are flush with cash. That's very important. Okay, Anisha, back to you on IRB Infra.
Well, yes, the stock has already run up 50-60% in 1 month itself, and now perhaps we know the reason why. Reports are suggesting a couple of papers that the company might be in talks with the Italian company Lancia to sell up some stake. Now, we don't know what stake that we are looking at, and also we don't know which assets are talked about. But this values the deal at around 13,000 odd crores. Remember, the market capitalization is around 9,000 odd crores. Even the fair value given by the analysts is sub 9,000 odd crores. So a 13,000 crore valuation is a bit high, and we can see a bit of stock reaction coming in today. Remember, around 57% stake is held by the promoter, and we have never heard any talk in terms of any stake sale coming by the promoter. In fact, I tried reaching out to the management this morning. The official word is that they're not commenting on the story, but there was a sort of denial in the tone when I talked to them. So let's see how the stock reacts to that one today.
Okay, stock could react to this news flow, but as Anisha just told you, no comments from the management.
Tone of denial was what she said, so let's see.
Yeah, IRB has been quite an interesting stock. It fell because of that regulatory issue, and after that it's risen back. So interesting stock to watch. But a couple of mid-cap pharma stock to watch, Ekta, Granules and Venus.
Yes, absolutely. Well, for Granules India, I expect the stock to be in the green. The Reserve Bank of India announced on Friday evening that they've allowed the increase in the FPI limit to 49% versus the earlier limit. So that should be a positive for Granules. But if you look at it, the FPI holding in the bank, in the company has been varying quite a bit. So, for example, it fell all the way from 19% in September of 2017 to around 14.5 to 15 odd % as of December 2017. So that stock should be in focus. The other one is Venus Remedies, where Exim Bank has unilaterally declared Venus Remedies as a willful defaulter. But Venus Remedies has called the step, in fact, unjust, contrary to facts, illegal, and they will contest it simply because their CDR was approved in 2014, and the company is subject to regular JLF meetings as well. The cash flow statement also shows no sufficient generation of funds, so they really are not willful defaulters. They wouldn't have entered CDR if that was the case also.
Okay, well, I just want a word on both these. Granules getting an RBI nod is not really market moving at all, as Ekta pointed out. It is the board which has the prerogative to raise the FII holding, and they've raised it from 24 to 50 or 49. Now, even when it was 24, they were not getting 24. As she points out, they got only 14. Yeah. Reserve Bank is not an approval. It just passes through them. It's more like signing off on it because they are the guardians of FX flow, inflow and outflow. So that's a non-news, really. So I don't think Granules anybody should grab simply because of this final sign-off coming, when anyway people were not, you didn't see an FII rush there. As well, Venus Remedies, every company, when it is called a willful defaulter, screams and shouts. But this is a serious charge that no bank makes this charge very lightly.
Yeah, okay, we'll keep an eye out on that. A couple of more stocks are in the news this morning, and Ronit will give us the lowdown. Ronit, over to you.
Thanks, Sonia. So I'll start with the numbers that came in post-market. As first I started Syntex Industries, weak set of numbers coming in. Revenue was up 44%, largely due to the capacity expansion kicking in. But the EBITDA was down 29%, largely because of rise in raw materials, and the margins took a big hit. Remember, the margins are the lowest in the last 6 to 7 quarters, as well as the PAT was down 50%. Moving on to BEPL, good set coming in. The stock is up almost 4 times the last 1 year, and the revenue more than doubled to 250 crores, and the EBITDA was up 5 times at 40 crores. And moving on to the PAT was up more than 10 times at 29 crores. And moving on to Muthoot, good set coming in. Net income was up 68%, as well as the net profit more than doubled to 15 crores. And finally, moving on to Bodhri Consulting, they won 2 orders worth 50 crores, and 1 orders from Magad University in Bihar worth 43 crores. And finally, eClerk Services, the season of buybacks continue. They'll consider buyback on Jan 23rd. Back to you.
Okay, thanks guys for all of those stocks. Here's a quick recap. Stocks expected to gain today: Tata Global, First Source, Capital First, of course, HDFC, IRB Infra, Granules. While stocks that could be under pressure: IDFC Bank, well, we'll see which way that one goes, Venus Remedies and Syntex Industries.